Hi, this video will help you understand the factors that are considered and procedures that must be performed when group auditors decide whether they can rely on the work of a component auditor in group audit. Before we go into the details, let's quickly review the key terms that you must already be comfortable with. The term group here means a parent and one or more components. A component may be a subsidiary, a joint venture, an associate, or business units or activities, which could include branches and divisions. So in a AAA question, the information given could be something like what you see on the screen right now. You're the group auditor at an Co. You'll be giving an opinion on the group financial statements, which include the financial information from three components. Component A is a foreign subsidiary in Ashland, audited by a completely different firm called Nia & Co. The other two components are audited by Allen & Co. or a network firm. Not really related directly to this topic, but just a quick recap. The group auditors need to determine the components at which audit work will be performed. So they would consider factors like newly acquired components during the year, or components in which significant changes have taken place. Other examples include ones where there have been many misstatements or control deficiencies identified in previous audits. Now, this brings us nicely to our topic for this video. Group auditors need to decide the extent to which component auditors are to be involved. So if they have serious concerns about their quality or ethics, etc., they need to carry out the audit work themselves without involving the component auditor. We're going to look at a common requirement in the exam that covers factors that must be considered in deciding whether reliance can be placed on the work of component auditors and the procedures that need to be performed regarding this. Let's start by looking at a typical exam requirement, which asks for factors that should be considered and procedures that should be performed in deciding the extent of reliance to be placed on the work of Nia & Co., which are basically component auditors of an overseas subsidiary based in Ashland. This is a very easy and interesting topic, and you can actually prepare all of it from this video. So starting off with the first factor, we are going to evaluate. So we as the group auditors are going to evaluate whether the component auditors are ethical or are they subject to the same ethical requirements such as the group auditor. Because we're studying for the international variant in this video, this basically means whether they comply with ISPA's code of ethics or whether their local code of ethics is quite similar to ISPA's code. Another factor that they need to consider is whether the component auditors have the appropriate competence and capabilities, which include sufficient time and resources to carry out the work that we are going to assign them. So there are two different factors we're looking at: their competence and capability, which could be later on reviewed by looking at their qualification, experience, etc., but then also the sufficiency of resources that they have in terms of time and human resource. An important factor to consider is if the component auditor is from the same network firm, there is likely to be standardized systems of quality management across the network, so greater reliance can be placed on their work in this respect. The third factor that we have to evaluate or consider is whether we are going to be able to sufficiently and appropriately be involved in their work. So we need to look at whether there's any restriction in terms of us being able to access their audit documentation and the ability to review and supervise their work. So if there's no indication given in the scenario, this can be written as a straightforward point. We also have to consider the results of the component auditor's firm level monitoring and remediation processes. So for example, in our example that we are using, because the component auditor Nia & Co. is a completely different firm, we basically need to evaluate whether they have their own internal quality reviews, if they've had external inspections from their own local regulators, etc., because this would mean that someone is keeping an an eye on the quality of work that is being done by them. A few additional factors that you can keep in mind, and of course, write in your exam, these are given by the auditing standards, are that in our example, once again, the component auditors are likely to have more in-depth knowledge of the local industries and the local laws and regulations, which could be like an additional positive factor if we're happy with the first four. For some work, it might be logistically easier for the component auditors to carry out that work. So remember, we have to observe inventory counts, and if we're in an overseas location, then it might just be easier for the component auditors to be there and observe that inventory count. And if applicable, we could also be looking at our previous experience with the same component auditor. So you could actually learn these 7 factors because these are broadly the 7 areas that need to be considered before we rely on their work. Now, the next step is, how do I confirm it? We know what the factors are, but we also have to consider or explain for the exam the procedures that we have to carry out to confirm these factors. Just before I get to the procedures, a quick reminder that even if we do end up deciding to rely on their work and get them to carry out some of the audit procedures, we will still be responsible for directing, supervising, and reviewing their audit work. So there's no concept of 100% delegation. The basic responsibility lies with the group auditor. So we know what the factors are. Again, we can learn all the procedures from this particular video. It's quite easy. So in terms of the ethical issues, we could actually review their ethical code and compare it to the ISBA Code of Ethics and see if there are any significant differences in the requirements and principles. Another way of doing this is getting a confirmation from the component auditors to make sure they have complied with their local code and ISBA's Code of Ethics where applicable. We could be carrying out a discussion or maybe get them to fill out a questionnaire where we need to confirm that they are a member of an auditing regulatory body, and we need to find out the professional qualification which is issued by that body. We could also obtain confirmation from the professional body to see that this firm is actually licensed to carry out the audit. Through discussions or questionnaires, once again, we could be trying to find out if Nia & Co is a member of a network of firms, and if again the network of firms is something that is big and has quality management procedures that they follow, we will have more comfort around their quality management procedures. We should also be discussing the methodology that they use. This could include how they set materiality, etc., how they carry out risk assessment, and we could compare it to the ones that are recommended by international standards on auditing. So in my example, this is particularly a concern because it is a foreign subsidiary. So I'm not aware of the auditing standards which are followed in Ashland or that overseas country. Remember, we need to find out about the quality management policies and procedures that the firm have in place. So we can actually find out about those policies and procedures. And we're talking about the policies, quality management policies used by the firm as well as for individual engagements. Remember, if they are complying with international standards like ISQM 1 and 2, this would mean that we can rely on their work in terms of. Could also request the results of any monitoring or inspection visits carried out by the regulatory authorities under which the firm operates in Ashland. The idea is that if you review the reports of those inspections, and if there are any significant deficiencies in the quality of their work, we will not rely on that component auditor's work. We could or we should also communicate to the component auditors in advance that they understand that there are certain assurances that our firm will expect to receive. This is to avoid any subsequent misunderstandings. So just to quickly wrap up, we considered the factors that have to be considered, and we've designed procedures to actually verify or confirm those factors. Sorry. Just a quick reminder that the auditor's report on the group financial statements cannot refer to the use of the work of a component auditor unless this is required by local law or regulation to include such reference.